What's going on, Moon Gang? We're back at it again with another episode of Dumb Money. Now, in today's episode, of course, we'll be talking about AMC, GME, their short interest, the failure to deliver, and a quick chart breakdown. But I really want to focus what's going on with Robinhood because it seems as if some of their past actions are finally catching up to them. With all that being said, let's hop right into it. Now, both AMC and GME did close the day out in the green. AMC was at 56.68, while GME was at 214.14. So here's what's going on with Robinhood. This was reported earlier today by the Wall Street Journal. Of course, I'll make sure to link this article in the description of the video below. Robinhood agrees to pay $70 million to settle regulatory investigation. Robinhood has agreed to pay nearly $70 million to resolve sweeping regulatory allegations that the brokerage misled customers, approved ineligible traders for risky strategies, and didn't supervise technology that failed and locked millions out of trading. The Financial Industry Regulatory Authority, the frontline inspector for broker-dealers, aka FINRA, unveiled the settlement on Wednesday. Robinhood neither admitted nor denied the claims. To my understanding, this is how this kind of stuff goes. Like, they don't admit guilt, but finally, it seems like some of their actions are catching up to them. FINRA alleges a series of failings by Robinhood, which agrees to pay $57.5 million and $12.6 million in compensation for harmed investors. So what's going on here? Basically, they were allowing people to do very risky options trading who did not have the knowledge to do it. So they were inappropriately approving people. They weren't showing people's proper P&L, and that aspect was actually very sad. It led to a very, very sad outcome. And then finally, they had a series of outages that not only stopped people from being able to access their accounts, but even brought down their customer service contact. So people didn't know what was going on and there was no way to reach out to them to see what was happening with their money. So none of this actually ends up relating to what happened at the end of January or early February when they stopped the buying of GME, AMC, and other related stocks. That is actually still being heard by judges and being argued by lawyers. That's still in the legal system as of now. In 2019, the broker paid $1.5 million to resolve FINRA's claims that it didn't take adequate steps to ensure it got the best prices for customer orders. In fact, actually, Citadel Securities also got hit for a very, very similar thing. In December, Robinhood agreed to pay $65 million to the SEC to settle claims related to its disclosures for payment for order flow or accepting revenue from high-speed trading companies that pay for its right to execute retail investors' orders. This comes back to HFTs, high-frequency traders. That's what this high-speed trading thing's all about. Robinhood said after reaching the SEC settlement that the problems found through the investigation do not reflect Robinhood today. Now, I'm no lawyer and I don't work for Robinhood, but I kind of call BS on this one. U.S. securities laws allow payment for order flow as long as the brokerage company's relationships and any conflicts of interest are disclosed accurately. In my personal, humble opinion, I don't think payment for order flow, PFOF, should be allowed at all. And so, like I said, some of their actions are finally catching up to them. If you ask me, I think they should have got hit more. But if you ask them, this was a tweet from Charles Payne. He related to this article. I think they thought they were going to pay less because they only set aside $26 million to cover the SEC FINRA fines. So they set about a third. So I think they thought they were going to get away without such a hefty payment. So that was a blow to them, but I think I think that they actually ended up deserving more. Speaking of AMC, here's a quick look at the chart. This has not changed much. This is exactly what we've been talking about now for about 2.5 weeks. We're just consolidating. We have ran up, we had this flagpole, and then lower highs, higher lows. We're in this bullish pennant. We're waiting for the breakout. Patience will pay. And just to give you, maybe ease your mind if you're feeling a little bit antsy, please do not forget that ever since this recent rally started on May 21st until this very moment, we are up 370%. So to put that another way, after this run up, we are now consolidating at a gain of 370%, which is, it's beyond amazingly good. It's jaw-dropping. The fact, usually when you run up like this and then you see this series of 3 red days, that's kind of it. This run up, it shoots up, and then it comes cratering back down. The fact that it was able to catch itself at $41, push up to 64, 65, and now we're consolidating in the high 50s, that shows how strong the support behind the stock truly is. Over the past month, AMC is up 74%, and from the start of the year until this very moment, it's up over 2,500%. Absolutely amazing. In terms of its Ortex data, today there was a return of 4 million shares, borrowed shares of 900,000, and a return of 5 million. To me, this does make sense because remember, with return shares is two separate things. And I think I want to clarify this just because I know it's been discussed more commonly in the community lately. Remember, return shares, two different things. One potential option is shares that went on loan, were never shorted, and just returned. The second options are shares that went on loan, were shorted, covered, you have to wait 2 days because of the T2 settlement, and then return. None of this is delayed. The numbers on top are updated every morning, and then live updates are truly live. This block right here, it's not shorts covered. This is return shares. If it said shorts covered, then yes, that would mean that it's delayed by 2 days. But return shares, remember, it's actually two different things. And I see what you're saying, but like they are actually returned today, but it gives you an indication of maybe what some of the shorts did 2 days ago. So 2 days ago, is it reasonable that some of the shorts were covering? Well, let's just quickly check out the price action. So 2 days ago, I think it is probable that, remember, there's 100 million shares on loan. And on this day, June 28th, it traded 100 million. And we had this very nice run from 54 all the way up to 59. That $5 run, yeah, I do think that a small amount of shorts covered, and that's 5% of the shares on loan, 5% of the volume for the day. If this is what a mere 5% covering gives us, man, I am more than happy to take that. So it is a little representative, and in my mind, it does add up. As you can see, we have this nice trend. The estimated short interest is spiking up. As of now, it's around 18.4%, and the shares on loan has gone from 78 million all the way up to over 100 million. Ding, 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 ding. Another thing I want to point out, so we have the new failure to deliver report that came out today. Remember, it's always lagging kind of by 2 weeks at best. So today, at the end of June, we got the first half of June. And let me zoom in here. You can see after this beautiful day where we ran 95%, the very next day, there was a big spike in failure to delivers. And now that we're talking about AMC being on that threshold list, and by the way, if you want to know more about that, make sure you check out my update video from yesterday. I kind of did a deep dive of what was going on with threshold securities and what it means to actually be on the list. But anyway, we know for a couple days in a row, this has been 2.5 million at least, like a conservative, like low estimate for days in a row. So we have to wait till mid-July to get the end of June, but I'm excited when that comes out to see how high these FTDs truly, truly are. Now let's talk a bit about GameStop. GameStop, oh, that was just from earlier today on the stream. What can I say? I just like the stock. But anyway, we have still, it's the way we have that same technical setup with AMC, not much has been changing with GME. We have the support between 200 and 210. Right now, we're actually building the support up higher. Instead of 200, it's clearly building at 210. We're looking for the breakout above the trend line around 225, and then hopefully a test of 240. Over the past month, it's down 14%, but from the start of the year until now, it's up a pretty considerable 1,000%. That's actually an amazing, amazing return. In terms of its numbers, today there was a net return of 851,000 shares. The short interest is 10.67%. Shares on loan, if you do that, it's probably 8.25 million, utilization around 23%. And once again, the short interest shares on loan, pretty much flat. And if we take a look at its failure to delivers, just to give you an idea of how wild this can get, this is insane back here. Back in January, early February, these FTDs on GameStop were absolutely ridiculous. And I wanted to show you this because I wouldn't be that surprised if we see a similar scenario starting pretty soon with AMC. Or when I say soon, I mean like finally when we get the data, because like it's just so incredibly frustrating. It makes me want to pull my hair out that we don't get this information soon. Like, why are we always at best behind by 2 weeks? So incredibly frustrating. I don't know why we can't get these numbers, but I like I said, I don't think we're going to be that surprised to see similar spikes, like just a huge run up in AMC stock when it's finally reported. So overall, another good day to be a member of Ape Nation. AMC in the green, GameStop in the green. I'm excited to see how this plays out. I'm waiting for AMC to break out of that bull wedge, and I'm looking for GameStop to get above a trend line and then really see how it reacts to 240, 250. We were talking about the short interest. It seems like AMC's just keeps going up, up, and up, while GameStop's is a little bit more consistent, and no matter what the bears do, they cannot beat the stock down. And what's kind of exciting specifically about today is the fact that Robinhood finally, their actions are catching up to them. We all know that they're doing duplicitous things, illicit things that, like, the mythological story of Robinhood, it's weird to me that they call themselves that, because it seems like they're doing the exact opposite. So yeah, I think it's good that they got the fine. I think they deserved a bigger fine, but I'll take it. It's better than nothing. So overall, that's what's going on right now on Team Dumb Money. That's what's going on in Ape Nation. Let me know if you enjoyed this video. And until next time, for me and Chair, best of luck in the markets.